What's going on, guys? Steve here. As you well know, the Consumer Price Index, or CPI as they call it today, hit a number of 9.1%, which is astronomically high. So we are officially in a recession. One of the things I want to talk about today is my investment strategies from this day going forward, probably for the next year or two, depending on how bad things get. First and foremost, I would like to say that these times are trying, and it's not really anything that's, to be celebrated about. But if you're a long-term investor and a dividend investor like myself, these are opportunities for you. The last thing I want you to do, not me, but, anybody with a level head, just keep a level mind. Don't sell. Don't sell anything. You know what I mean? This is when fortunes are made. And this is what we always talk about when I mentioned before, the rich get richer. These are the times that happens. So, with that being said, this is my plan on what I want to do for 2022 and beyond. First of all, what I plan on doing initially is you managing the portfolio, and the first thing I want to do is stock up on VOO, which is the S&P 500 ETF. Now, the reason why I want to do that is because as the whole index is dropping, you know what I mean? I don't know if it'll get back up to the numbers it was before or whatever, but you want to put your money, well, I want to put my money somewhere safe, but while still investing. And the ETF is a perfect opportunity for me to do that. I already own shares of VOO, which is the Vanguard S&P 500 ETF, and I plan on just adding more to that. I feel it's beneficial to me to do that along the lines of moving forward until this thing starts to, get some type of direction and gets traction in the, which direction we know we're starting to head, where we get an upturn. With me, the ETF is a no-brainer. It's a no-brainer. You take your money and you put it in a basket of stocks instead of just having, individual stocks, which is okay. But I mean, it's always good to have an ETF to help buffer losses and uncertainty in the market right now. I mean, you all know the VOO is like 80% of American business. So, it's a safeguard against, a huge drop. And for me, that works for me. I'm not trying to have huge losses. And I've been buying periodically since this drop has been going. So, I mean, I'm in pretty good position as far as, dollar cost averaging and stuff like that. Another stock, I'll get back to that, but another stock that I'm going to jump into, I wrote it down here, is AT&T, because they have the high dividend. I have a solid position in the company. Vici, which is, the Las Vegas real estate investment fund, and Altria. These are the four stocks I'm going to jump into this year, and just continue to add positions. I have positions in all of these. I forgot to mention that. I have positions in all of them. We'll know more when they have the short term, when they have the meeting. The Fed has the meeting in late July. But honestly, I think, but I know, I don't want to say I know, but I mean, it's looking like things are going to get way worse than they are right now. So if you have some money or anything like that, everybody's saying, yo, save your money, save it. For the most part, how can I say this? Worst case scenario, in my opinion, is they'll raise short-term interest rates. Meaning, it'd be hard to get a car. It'd be hard to get a house. But they're trying to reduce spending. And couple of months ago, we had like a housing like explosion. You couldn't get a house nowhere, and we had a car shortage. So it's bad that they're doing this, but I mean, I think it's a necessary evil. So I'm just gonna stay low. I'm not gonna sell anything. I'm gonna keep the stock I have, consolidate the portfolio, and just watch the market, man. I mean, that's all I'm gonna do. I mean, I'm in good position, but I will tell you this. Right now, if you are not in the stock market, right now is the time to get in it. Because this is when, like I said earlier, when people always, like a lot of people say, oh, I'm gonna wait till the prices go down. I'm gonna wait till we have a market crash or something like this. You gotta understand something. This ain't gonna last forever. You know, inflation is a cyclical thing. It's cyclical. It lasts for a while and then it goes back. And then, you know, when the market goes down, when it takes off, the next time it explodes. You don't want to be left off the train. Now, right now, the train is slowing to a stop. And it's very easy to get on. You know, we're not in the bull market. Everything is slowing down. You know, when they release that pen, and it'll be the running of the bulls, you want to be way up ahead so you can laugh at other people getting hit in the behind. You know, you don't want to be on the sideline for this. You know, I encourage anybody that's trying to get into investing, jump in. Jump in. You know, I'll upload a video probably later on, sometime I'll make it in the near future, of the good time to jump in for a beginning market, a beginning investor in times like this. But I mean, that's all I got for now, you know. But stay vigilant. I'm telling you, stay vigilant. Don't sell your stock. Do not sell nothing. And just watch the market. Dollar cost average. Bargain hunt. You know what I mean? And, you know, do your due diligence on companies. Because I'm telling you, a lot of stocks are going to drop. And the opportunity is there for the taking. You got to grab it. You got to grab it. But I mean, you know, leave me some comments down in the comment box. And tell me what you guys think. What's your plans? What are you going to do? You know, I'd like to hear about it. But I guess that's all I got for now. You know, thanks for tuning in and spending time with me. And I'll see you on the next one. And please like and subscribe. I have good content coming. And as I get more comfortable with this YouTube thing, we're going to get this train rolling. But so far, I appreciate the thumbs ups and likes from some of my viewers. And let's hope to continue it. That's it for today. I'm Steve. And we're out of here. Thanks for watching.